Hey everybody, this is David Skarica, stock chart of the day for December 10th. So I'll have a members update out. So today we're going to talk about something a little different. We're going to talk about, so I think what I want to do between now and the end of the year, so roughly the next 3 weeks, is just kind of do less updates. I know I'm doing this one on Tuesday, but I think I'm going to do them Monday, Wednesday, and Friday, or Tuesday, Wednesday, and Friday, and that's it. But kind of longer and maybe more in depth kind of things like I guess subject matters. And then what I'll do is I think I will make these private at some point and be part of my paid service. So we're kind of do themes. You can watch them now. I'll keep them up, and then I'll make them part of a paid service when I really get aggressive. Hopefully, after my book is out next year. Because what I've been doing, just to start off here, I've talked about this over and over. I haven't really cared too much about the views and subscriptions and since I switched Addicted to Profits to stock chart of the day, I've been more just like creating content so it can have a good backlog. And that way, when my book comes out, I really think when my book comes out, that will really get my name out there again. Because in like basically from about 2018, for about 4 or 5 years, I concentrated more on like consulting, and I have a small group of high net worth people that I get into deals, et cetera, et cetera. And I made way more money off that in the newsletter. I really wasn't doing the proper newsletter, but it was like I was making so little money off it, and most of it were just long-term subscribers. Um, and I just, and I just kind of lost my passion for it. I just didn't like writing it anymore. So I like doing these videos a lot more. And then and then we're gonna really get going next year. So what I'm gonna do is probably that, just three a week. We're heading into the holidays too. So, and I'll do more themes and stuff. So today's theme is gonna be what's called the dollar milkshake theory. So this is an interesting thing that says, you know, it's a guy named Brent Johnson. He runs Santiago Capital, and basically what he talks about is that basically um, that I don't need to get into the whole details, but basically the U.S. economy will start to outperform, and this will cause all the money in the world, all this money to rush into the U.S. dollar, and U.S. assets outperform, et cetera, et cetera. And at some point, this will end in a bubble, and there'll be a crash, and then they'll have to print money, and then that kind of trade unwinds. But as opposed to say someone like Peter Schiff, who's always calling for the devaluation that uh, numbered, uh, this is what he's saying. Now, I think there's another caveat to this where if you go look at downturns like 2008, 2020, we'll go look at this in a second. In the US dollar, it usually sees a flight to quality because the US dollar is the reserve currency of the world. Look at the 25-year chart of the dollar. And you can see, the US dollar, that little spike here. And then during 2022, the downturn in the market. And of course, during 2008. So usually in these downturns, what can often happen is people go into the dollar because liquidity is decreasing. It's a safe haven, et cetera. This happened with the British pound in the early 30s. During the Great Depression, that's when the British pound went to a record 5 against the dollar. Of course, now it's like 125. So that's what happens with these reserve currencies. And you can even see the early 2000s the same way. We had this bear market and the dollar rallied. So I think there's a little caveat with Ben's argument, in my opinion, that the U.S. dollar can attract capital with trades unwinding and people just getting into it out of safety, not just because everything is booming. And you can see we have had this bit of a rally here. So the question is the theory he's talking about happening right now? Is it because Trump's got pro-growth policies, et cetera, et cetera? People think the U.S. is going to outperform economically. Is this causing this? And so there was a dollar rally here, but you could argue that was coinciding with, it looks like, when Trump looked like he was going to win the election, and then he won here. So that's another issue. I do think because Trump wants to bring back manufacturing, and he's a big kind of he's a big protectionist when it comes to trade and that sort of thing. So I think he'll be able to do that as well. He'll want this to weaken as well. So that will be interesting to see what happens if he can do that. So they may pass laws that basically restrict a lot of foreign investment, stuff like that, to kind of weaken the dollar if the dollar gets too strong. Someone sent me an interesting article saying that in 2019 they were actually talking about doing this as well to kind of weaken the dollar and help U.S. exports, U.S. manufacturing, etc. So anyway, I just wanted to show you, like, that's the dollar trade. That's the kind of the theory, and we're seeing the strength in the dollar. So the question is now is, does it continue? Do U.S. assets continue to go higher? Do we say go back up to this high of 2022? Remember, that basically coincided with the lows of the market as well. Or do we see, if we see a bear market, do we get that flight to quality, et cetera? So, can this happen here? Because we're right here, you can see at this kind of resistance of 2023. And if we, that's a pretty nice, longer the base and more the space, that's a pretty nice base going back to 2023 over 2 years now. And I think we can rally up to a buck 15 if that's the case. So so I'm just having a swig of my coffee there. So will that occur? And like I said, the dollar milkshake doesn't just have to be what Brent talks about with assets going up. It could be a flight to quality in a fear trade in a bear market, like we saw in 2022, like we saw in 2020, like we saw in 2008. Let's just get a chart that goes back 20 years so we can see all those instances. And again, you can see the 2008 spike. You can see that little spike here in 2020, and then recently. Look, let's just get like an 8-year chart so we can really see the ones of, yeah. There's that spike in 2020 during the short-term kind of COVID crash. They didn't like this rally here, supposedly the Trump administration, and of course the dollar is much higher. The dollar index was at 98 then. Now it's at 106. It's 8% higher roughly. So again, we'll see what happens here and if that kind of plays out. But here's the thing where, again, I think I don't have to agree with everything Ben says. I'm not taking this as sacrilege. Is we look at this. This is an interesting thing from bar chart, and this shows that foreign exchange and holdings in US dollars, a percentage of total allocated. So what we can see here, this has been downtrending, for 15 years now, and it hit over 65% back here. This would have been roughly about 2014, 2012 to 2014 range. And now it's 58%. And we see this big dump here. A lot of that had to do with Russia because when they kind of seized some of Russia's gold and put the sanctions on Russia, a lot of other people said, you see 58% of holdings now. A lot of other central banks said, we're not going to put our money in dollars. We don't like what the U.S. is, how they're weaponizing the dollar. And well, you see, this has slowly happened. Now, it doesn't really hurt the value of the dollar. Part of the reason is some of the dollar inflows are futures trading, short-term trading, that sort of thing. But I think ultimately what's going to happen, and I do believe that the U.S. dollar will lose its predominance as the world's reserve currency. And one reason that Trump is going so hard off the BRIC countries is the BRICS are trying to create like their own currency or their own kind of SWIFT system. SWIFT is the system we use for wires, and that's a US dollar based system. So that kind of keeps the US dollar as dominant for use because people need SWIFT to transfer bank funds, right? So if they can set up their own BRIC system that's like, goes from whatever rupees to real to rubles to won, etc., then they kind of get out of that. And I think he's going hard on them because he sees that they're doing that. And then again, that hurts the dollar's dominance. But I think ultimately what will happen is maybe we'll get a thing where, like, I don't know, 25, 30% of the world's reserves are in US dollars, euros, maybe some kind of joint BRIC currency and gold. Maybe those four things. The pound is still used as as a reserve currency. I think something like 6 or 7% of the world reserves are still in pounds. So it's not just like you always have just the US dollar being used. But I think what will happen is because there's no real dominant player now, because China's having struggles. China looks like Japan in the 90s and 2000s now, that its economy is slowing after too many bubbles. And India is still kind of in its infancy, growing into a superpower. It's still too poor. So we're kind of in this no man's land where the US is still the dominant superpower, and there's really no one there because of the slowing in China to take over. So maybe this group, it'll be more like this group of countries do it as well, right? So that's something to watch out for. But again, I think it's interesting that even though the US dollar has had this rally and been strong for like 10 years now, we're seeing that foreign, exchange holdings as a percent of the total is down. And part of the reason this is gold. China, Russia, all these places are buying gold, right? And that's why even the US dollar, again, you can see since 2018, the US dollar is up about 15%. And let's go look at gold. Gold is up, from this low of like 1,200 here. Gold has more than doubled in price. And that's part of the reason why we're getting central banks. And it's not just central banks, it's sovereign banks. It's those big wealth funds from Saudi Arabia, Norway, places like that are buying gold and silver as well. So I'm going to leave that on that. So that's the dollar milkshake theory. The question is, will it happen in a melt up in U.S. assets? Will it happen in a meltdown and a flight to quality? I don't know. I tell you this much, I think that trade will reverse if there is a meltdown, and once the Fed begins to print money and cut rates aggressively, that will reverse. But I just wanted to show you that, and I think it's interesting that even with this strength in the U.S. dollar, over the last few years, we're seeing gold rally. We're seeing the foreign exchange holdings as a percentage of the total allocated going down, et cetera, et cetera. And I think that's a sign the U.S. dollar again will lose its supremacy at some point. These things can take decades. Like the pound was the UK had a lot of debt problems after World War One, but the pound didn't lose its status as global reserve currency until after World War II, which is 30 years later. So these things can take a while to play out. So everybody, take care. I hope you enjoyed this. Like I said, we're going to do, I think rather than doing 4 or 5 updates a week, I'm going to be more at like 2 to 3, and we're going to do more in depth with these kind of themes. And then at some point, I'm going to be honest with you, I'm going to probably take these videos private and make this part of the paid service so people can get these, but I'll leave them up for a few weeks, etc. So, if I do 3 a week, probably one or two end up taking private, and then you'll still have other things. So I have to think about new themes. I think this dollar milkshake theory is a really interesting theory, and it's interesting that it's like, okay, the dollar's going up in price, but again, foreigners are using it less as a percentage of their holdings.